Oh my God, it's overextended. It needs to see a pullback. Look at that. It may be a wick, right? It's pushing down. It's bearish pressure. Bearish pressure, guys. It's pushing back down. Oh my God, it's a pin bar doji. It has to go short. We need to see that deep pullback. Oh my God. We need to see that pullback. Oh my God, it's happening. The pullback is upon us, guys. Oh my God, it's doing the bearish pressure. Oh my God, what's happening? Oh my God, new one. Okay, we got to get in. We got to get down. We got to get in. We got to get down. Oh my God, it's going down. Get in. Fuck. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and in the last few videos, we've been breaking down the importance of, understanding where the structural range is and how to keep on getting involved with it. And the problem I see a lot of traders make is, just because a trade is valid, right, doesn't mean the trade is valid for you. What I mean by that is, as we've spoken for the last, few months, and even in the last few videos, as you guys all know, I've been very bullish on UJ ever since the accumulations that were occurring in here with the structure and the S&D supporting it, right? The 3-box setups in here. Again, if you're new to this channel and you're listening to my dialect and it's a little confusing, make sure you're watching my other videos and you're starting from the beginning and working your way up. Otherwise, this can be a little confusing. However, I'm going to do my best to, get knowledge across without you needing to catch up with everything else, but it's important because everything's a layer and it builds that knowledge upon, right? And every video that I make, the real priority basically is to either A, change your psychology in a certain way, B, change your view on a certain thing, or C, improve a certain element of what you're doing in terms of trading, thinking about trading, basically anything to do with the psychological perspective based or even application of a given concept or even the small nuances of a given concept. And that's kind of what the last few videos were dealing with, because a lot of people, when they get into the motion of finding their structural range and looking at their zone, instead of looking to still continue that bullish run, even if it happens up here, they will start to force sells into the market to try and get back to certain zones. And therefore what happens is they're almost always on the wrong side because the market is already showing you wants to go a certain way, right? And the best example of that, as I've shown a few times now, is, for instance, you have this weekly break to the top side right here, right? You have the zone that supports that move away right here. I'm going to make this a lighter gray. There we go. Right, price comes into that zone and begins to push away, and that's fine, right? In this case, we have a perfect scenario where price makes that impulse, makes that break of structure, creates that zone. Price actually does come back to mitigate that zone, begins to undergo its Wyckoff accumulation and its accumulation, and then begins to go long, right? When you hear me say Wyckoff, I'm talking about Richard Wyckoff. Everything I do is pretty much centered around the idea of weak to strong hands, the transfer of liquidity from supply to demand or demand to supply, and the usage of certain ranges to do so, and then the continuations of those or the markups of that. And what occurs after this weak to strong hand transfer has occurred, after lows have been taken and everything that needs to be mitigated has been mitigated and price begins to go long, what occurs on that long is, that markup is occurring, right? That cycle of Wyckoff is taking place. You have a markup that now needs to find some kind of higher liquidity point, such as, intermediary targets, small little targets here. So this is where price will reach for, immediately. It's an easier way to reach for. Then the overall structural targets, which are runs of very large liquidity. And then if you partner that with higher time frame things, there's going to be runs on other very higher priority and high time frame liquidity, which is why over the last few weeks during this, beautiful 5.5 year long range, price has broken out impulsively and started to take out all these highs, and it's continuing to do so. Week after week, you're just seeing huge bullishness. And what's happening is a lot of people, or a lot of retail, as you guys might know, if we go even here and just type in community outlook, right? I did this in my last video. If we look at this, the majority of dumb money or retail or people that undergo this basic technical analysis that isn't based in following the actual move to range of what's occurring, is going to be primarily short. And again, I'm not just saying this like it's some bullshit. Like, this is a straight up website that tracks the people that wanted to sign up. A lot of retail traders do this. You have about 80% of people short on this currently, whereas you look at this and there's absolutely no reason that you could be short on this, right? And they've been short like that ever since areas like this, and a lot of that is to do with the fact that there is the way people want to focus on price action is inner structure, which is basically fake structure as I teach it, right? Because the main structural impulse is still this one, and everything in between is basically fluff. Or, you know, they're focused on channels or trend lines, which oftentimes, as we draw these in, first of all, I've never been able to properly trade them because, you know, as it's being made, you have this channel, then you have this channel, then you have this one, then you have this one, then you have this one, right? And you know, the reality is, after the fact, the channel can look good, but the reality is, you know, when you have these channels drawn, people like to get into that very bearish bias, and, you know, this is huge selling on that part. Then it starts breaking. People start going, maybe it's this, you know, maybe the channel is actually this one. You know, people start selling into this heavily, right? Stops continue to be put above because that's where, you know, if people are selling, they're going to put their stops above somewhere, and then those stops get ran inevitably, right? Or the other problem is, you know, when you use support resistance, even though it can make you profitable, and you can be profitable trading support resistance, you'll find yourself kind of you'll find yourself confused or not knowing exactly where price may want to be heading next, right? Because the reality is you're just looking from zone to zone, and a lot of the time you can be, you know, you can be looking left for a long time, and you can just go, you know, I have my resistance here, I have my resistance potentially here, I have my resistance potentially here, I have my resistance potentially here, right? And you're not focused on the fact that this market wants to go long because of the underlying setups, which is this weekly bias, then this daily beautiful accumulation, this markup that's occurring. Instead, you're focused on getting to each one of these zones, and, you know, a lot of the time, you know, you can see that technically these zones are working, but the reality is a lot of the time you're not just buy stopping every single zone like this. What's happening a lot of the time for people trading like this is they're either A, looking for a tap and then a sell-off, right? So in this case, you can see again how a lot of people are getting in a market that they believe is bearish, when in reality it's extremely bullish. And again, you might say this is hindsight, but I've made videos on my public, even on UJ, ever since price was within these areas here, telling everybody that it's going to take off extremely heavily, right? That it's going to go higher. And in my mentorship, I have it documented. Every Sunday, I have a webinar with my students. It lasts from anywhere from an hour to 2 hours, and we break down, you know, a number of pairs and outlooks, and my main pairs that I trade myself are EU and UJ. So if I'm trading during Asian time, which is usually that 6 p.m. EST or 6:30 EST until like 9 EST, I'll be trading UJ. If I'm trading EU, it'll be during the morning, right? Because if you don't know why, check out my session sauce video. It's very in-depth concerning that, right? So what's happening is a lot of people are getting positioned short on this, right? And the thing about, you know, support resistance is that, you know, when you want to get involved in it, you either want to catch the trade when it gets there, so people are selling into this already as it gets here, people are selling this as it gets there, or if you want to go long, what people are waiting for is that break and retest, that break and retest, that break and retest. So what's happening is, even when it's breaking higher, right, and that bias of a retail trader might be bullish, they're still looking for that move back, for that retest. And what's happening is they might even intraday, you know, because this is a weekly chart, so intraday, they might be looking at any of these stops, as a example that price wants to pull back into an area or break and retest. Therefore, they're stuck in this idea that, you know, we need to force short because it's so overextended and very long. But that's never the case. The reality is when price creates a certain break or a certain impulsive displacement, right? The reality is that's the trend that has now been set in motion, and that's the trend that's most likely going to continue. And when that occurs, what you want to do is you want to use the 3-box system that I teach here on my channel, partnered with Wyckoff confirmations and entries and S&D zones, to get yourself involved with the other smart money that's getting involved with the knowledge of what is undergoing in this current market, right? So what I mean by that is, very quickly, once again, you know, you have your break to the top side right here, right? You have the lower low, lower highs. You could argue that it was this one too. Both are fine, right? Breaks to the high. You have the zone that created that. Price properly gets to the zone and begins to go long, which means we know that price should be going long at least till here, right? We can go check the higher time frames, and as you guys know, I spoke about this in the last video. You know, you have the bullish structure here that's now holding, so price wants to run this high too, which is what it's doing right now. And, you know, over time, you know, if we go to a 6-month, this is looking very far out, but theoretically, we just broke this structure, which means, you know, we might finally find a way to drizzle out here and then see some bearishness. But, you know, this high is a nice target into the future, because as this drizzles back and then becomes bullish again on a lower time frame, like a weekly or a monthly, there's going to be a very similar move that you have seen the last few weeks on UJ in here, But what's going to happen is that same move is going to prorate itself on this 6 month, because what's happening is the same thing's happening, right? A big range is being put in motion. That range is either going to A, start pulling back, or continue through to its liquidity, which we are anticipating, right? Because I'm not just going to come on here and say we're bullish and bearish, good luck. The reality is I'm more bullish than I am bearish, and I have been for a while. And until structure begins to properly displace downwards and break down, there's no reason to force any version of sells at all. If you do, you're going to find yourself losing. So what should you be doing in a market that, has finally created that bias? Well, as we remember, that weekly has just made its break to the top side, right? So here's your break to the top side on that weekly, which means we know that throughout here, there are going to be scenarios where price is either going to A, mark up, right, and just keep going higher and keep going higher, right? And then there's also going to be scenarios where price reaccumulates into deeper S&D zones, aka following the 3-box setup. And what I mean by that is, it's going to be hard to position yourself on this type of price action because it's not making proper pullbacks to demand zones you might be looking for. But that's fine, because as it makes new breaks, it puts in motion new ranges that are now the important statistical mathematical data points that smart money or institutions, or the composite man, as we like to call it, wants to protect their positions above. And what's going to happen is they're going to protect those positions at those lows, and sometimes you will get this deep pullback that undergoes an accumulation in here as part of this reaccumulation, hits the zone, undergoes that accumulation, weak to strong hand transfer, and continues long, right? And what I mean by that, and you can see that happening, is if we go to a daily chart right now, right, from the time that it hit here, we can begin to see that in motion, right? Price comes down bearishly, right? So we can actually draw this in. So price comes in bearishly into here, then break structure to the top side, right? So we can actually just notate this, right? Here's your bullish break of structure to the top side right here. I'm gonna make these smaller because I don't use them big. Breaks here. So at that point, you're actually valid to start looking for longs in here. And you can see that, yes, for a few days you'd have longs. These are good areas to get positioned in, right? And in this case, they would have all been losers if you did get positioned, which is fantastic because we're teaching you to actually think mathematically, probabilistically, and recognize that losers are just an easy and fun part of trading if you have a real system, right? I take losses all the time. I take break-evens all the time. Like today, at least, sorry, my allergies are literally acting up. But like today even, my entire day was just one break even. Yesterday, I believe I took 1 plus 10 because it was a very nice management. And again, when you hear me say plus 10 RR, we're not talking 10% because I risk a lot less, right? 10% or 10 RR for me at a 0.2% risk is about 2% gain on my account. And again, that does not happen every day. And again, that does not take into account my potential break-evens, which are minor losses for commissions and spreads. Doesn't take into account my losses, right? So you prorate your losses to this, right? And then you have a little bit less for the week, right? So for the week, I think I'm up like, I'm actually not gonna do that math right now, but nonetheless, let's just continue with the actual teaching, right? So you have this created, right? And then you might take that loss, and then it begins to go bearish again. And once again, you see that segue into a bullish market once again, right? And as you get this bullish break to the top side right here, right? So again, you're getting that displacement. If you don't know what I'm talking about right now, make sure you watch my video on displacement. So price displaces the top side here, and once again, you find your demand zone that created that. So that's this last down move. But as you know, in the way that I teach you guys here, you want to prorate that to the actual candle that created the move, right? So if you follow this, why is this candle invalid for supply and demand? So this might be a valid order block, but it's not a valid supply and demand zone. And we here at mentfx, as we have, evolved beyond the ways that I used to trade back in the day, and the way I used to think and teach, S&Ds is what we focus on now, which is supply and demand. And supply and demand needs for there to be an area that needs to be mitigated rather than an area that has been mitigated. So in this case, right, if we look at price action and draw it out, right, like this down candle right here, so let's say it opened, right, so here's the opening, right, so let's just make it easy. It opened, might have made this high, came down impulsively, right, and closed right here. So that's this entire down candle. Then the next candle looks like it opened, right, came just under the low, reached above the high, right, making that high right there, and then came back down into the zone and closed right here. Now, what this is showing you, right, is this is that creation of the original demand, right? This is institutions selling into very large positions and then buying those positions up, which means the open of this is where price needs to mitigate, which is right here, right? Or right here, sorry, the high of it, right? Because it opened and here's the high. So the high is where price needs to mitigate, but then price comes right back in and starts mitigating those positions because those positions that are now in a negative are being taken out and transferred into break evens so that price can then continue. And then, right, let's draw the next candle. It opens, comes down, it looks like a little bit, reaches all the way up to make that high right there, and comes down and closes right there. right? So now you have this. So what you have is this original down move got mitigated by this move here, but now you can see that there is a lack of mitigation, a lack of a pullback, a lack of price hitting this zone right here, mitigating this, which means that whatever sells to buys occurred here have been taken care of, but whatever sells to buys occurred here are now basically the new protected low, so price shouldn't reach below this unless it's just a quick wick, in which case it'll push back up, hopefully, if we are correct about our evaluation. Otherwise, price should come into here to mitigate to that last down move again, right, before going long, if it does, right? And if it does, then we can get involved. So again, that high is this wick right here. So the real zone, the unmitigated zone that has not been mitigated yet, because again, if we keep following this, right, let's just delete these. If we keep following this, next candle opens, reaches down to there, reaches up to there, closes here, next candle opens, reaches down to there, reaches up to there, and then closes here, right? So what's happening is we have failed to mitigate this portion here, and that's what we can see with this candle right here, right? This is the idea of being able to see volume in just the candles. You don't need the volume. We don't need a footprint chart, because what we're seeing is that transfer of orders and that lack of fills at certain areas. So what's happening is those areas need some kind of filling, and if it gets there and we see some kind of lower time frame confirmation, it's great for long. So this becomes this zone. This is the real supply and demand zone. And you could even make an argument, you see this low right here, this is what I teach also in the mentorship, but that's a hidden supply and demand zone. So this could be the actual zone you use. And why? Well, it's because from here to here is the real zone, right? This is the zone you want to view right there, right? Notice where that lines up with. We don't need to use this low, because this low has technically been taken care of with this move back in that mitigated this open, which was this open right here, right? So it's mitigated that, and that's the next area we want to look. So, right, we're now seeing that weekly transfer, and then we can look to get involved here. And once again, for mentorship students, fractalized double MB, I'm sure you guys can see it. There's a beautiful entry right there. Normal double MBs on a lower time frame is a beautiful entry. Likewise, if you're someone that trades only using the stuff here or the 3-box system, right, you have weak, weak, weak to strong hand transfer, the shift of inner structure or the shift of larger structure, the tap back into the original schematic, and the continuation upwards. So, you can see this on a daily, right? That's that beautiful fractal working. However, you can also see this on a lower time frame if you really needed to, right? So I'm just going to do this for you for the sake of showing you. But the same thing is right here, right? So let's just delete this really quickly. Here's that same zone that we were drawing in right there, right? And then you can see that same thing, right? Here's Wyckoff selling climax into the automatic rally. You could also argue this is the automatic rally. Both are valid. However, I'll just argue it's this one because it makes more sense, since then as we create the ST, right, that liquidity is being drawn out in a long way, right? Which means a lot of dumber money is piling into longs here, but placing their SLs most likely below here, 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 maybe some below here if they're more aggressive, and some below here, right? And then this is the clear of that. So then you're getting that ST and B, right? That creates that intermediary low. So again, a lot of people are getting involved on this because they are not willing to wait for the actual data point, which is this last down move as per mitigation. And then you have the actual down move into that point, which is your spring, right? Your shift of inner structure like we speak about, right? So here's your shift of inner structure that then comes to perfectly test the actual schematic at the last down move right there. And you can see that that's the last demand zone right there, because that's the one that created an unmitigated portion, came to tap in, and off we go. Similarly, you could have waited a little bit and waited for the huge validation of the actual schematic. Here's displacement on that schematic. You can take the limit on the actual schematic re-entry just like that, right? Because this could be more of a swing trading system. But again, what we're doing here applies on every single time frame and will work the exact same. And you can look to take that to the higher price. Otherwise, you could be doing something like this. You could protect even against the low just to make sure, right? And off you go. Now, as I go back to the daily, right? Again, what you're noticing is this is one of those examples where within a bias that is bullish, we finally had price come in and then begin to make that displacement. And in this case, it's making that move back in before continuing. However, as it continues and as smart money gets properly positioned in a given move, in a large move, it doesn't always need to make that huge retracement, right? And you can see that right here. We then follow up with another break to the top side. And that break to the top side is sustained, and it comes from this low to this high. Now, similarly, a lot of retail already, even at this point right here, is looking to force sells in any way they can because they're viewing resistance here, right? This is huge. This is like their little wick candle. They need to get in, right? They're like, well, maybe it can go up to here. Maybe it can go up to here. So a lot of retail is already stuck in the idea of, okay, the market is about to go up. How do we start getting in the sells, right? Already, even before it starts to make this huge run that it's about to make, as we all know, you know, there's a number of retail that's in this space right here looking for that, like the 80% of them are just short, 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 short. How do we catch the top now? And that's going to sustain itself, right? At this point, maybe it was like 50% retail is short. And as it continues, you know, what's weird is as a market becomes more and more fluent in one direction, or a trend becomes more fluent in one direction, retail wants to catch the high more and more and more. And as this happens, more retail gets short, right? Because in their minds, it's an overextended, it's hitting areas that are too high up, right? It's going too far away from the original channel or the other new channel or the further up channel, etc., 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 right? So this need to force price to return to its original area, right, which is called mean reversion, is just attacking everybody's accounts, and in many cases without proper risk management for people that are in this dumber money space, is just wiping them clean, right? Now there are people that trade the retail way and make a lot of money doing it, and you know, amazing, congratulations. Like, I think that's really amazing that you can do that. But again, already at this point, even dumb smart money now in like kind of dumber mentorships or on some of the stuff on YouTube are already looking at this zone here and trying to force new sells into this area. That's exactly what's been happening over the last few you know, weeks, even with UJ, as to where it is, not right here, but where it actually is. And we'll take a look at that in a second. Right, so a lot of them are already trying to force sells into here, you know, and then they're losing. Right, and then they're losing. Whereas a lot of people in my mentorship and even here on YouTube fully understand that because we've created that bullish break within the context and the story of where we are in a higher time frame. And again, just because this is a weekly and a daily doesn't mean you can't apply this on a 1 hour and a 1 minute or a 5 minute and a 1 minute. It's all the same thing. It's just fractalized, right? The moves are just going to take longer on higher time frames. The reason I'm so passionate about this specific teaching is because, you know, this move happened over the course, you know, this set up over the course of over 5.5 years, and now it's come to fruition, right? That move is now coming to real fruition, and it's actually, you know, delivering. And that move, upon delivering, you know, we spoke about it being long. We spoke about how it's going to be long, how we can get involved at every one of these points on the markup, because all of this here that you're seeing is the markup. It's price making that Wyckoff markup after undergoing its long-term accumulation, and then this liquidation and clear of this high is a major liquidation of a lot of players in the market, including this 3-month high, including the potential 6-month high, etc., right? And that's what it's reaching for, and that's live price right now, right? And we've been long on this the entire way through, and a lot of retail, as you can see, has been very, very short on it. Why? Because there's a flaw in the understanding and the way people are being taught to look at certain things. And because even though a lot of retail might have been long on this, they continue to seek pullbacks rather than seeking continuations. Because it's hard when you're doing this to look at a market like this, right? And instantly think, yep, continuation, right? Yep, this is going up, this is going up, this is going up. It should be going up, it should be going up, should be going up. A lot of us, even in the smart money space, see this and we go, it's overextended. We need to see some kind of pullback to our demand zone, right? Next day. Oh my God, it's overextended. It needs to see a pullback. Look at that. It may be a wick, right? It's pushing down. It's bearish pressure. Bearish pressure, guys. It's pushing back down. Continuation. Oh, actually, not even continuation. Oh my God, it's a pin bar doji. It has to go short. We need to see that deep pullback. Oh my God. We need to see that pullback. Oh my God, it's happening. The pullback is upon us, guys. Wait, what's going on? Okay, well, get involved. Get short, get short. Stop loss above the high. Get short. Okay, you know, it's a good, it just comes to test it a little bit. Don't worry, guys, it's going short. You know, hedge funds start getting in. We got this. Let's start getting short. It's too overextended. It's showing us the pin bar. Liquidated. Next day. Oh my God, it's doing the bearish pressure. We need to get in. We need to get down. Oh, this is weekly. We need to get in. We need to get down. Oh my God, what's happening? Oh my God, new one. Okay, we got to get in. We got to get down. We got to get in. We got to get down. Oh my God, it's going down. Get in. Fuck, right? And again, and you're fully liquidated once again, right? Because every day is focused on that bullish delivery rather than that bearish. And all of those bearish participants are trying to force and force and force any sign of bearishness, whether it be a mini little, you know, doji candle, or whether it be some kind of new structural shift or even some intermediary, right? Because we speak about this a lot. Boom. Some intermediary structure. Someone sees this and they're like, well, we have to sell now. We have to sell. We have to sell. We have to sell, right? But in reality, all it's doing is becomes a smart money to, a weak to strong hand or weak to smart money, gives that setup and goes and runs, and it's a reaccumulation. And that's exactly what's even happening to some people this week, right? Because what's happening is, oh God, this looks awful. Because we spoke about it this week, and we actually had a few people that had this issue in the mentorship, which we instantly focused on correcting, which is why, you know, having people in a community around you, especially, you know, every single day, you know, double checking what you're doing, and you get to see what other people are doing, is very, very vital, and in some cases, you know, can speed up your learning process a lot. But what's happening is this week, you know, we finally saw some of that bearishness. And what's interesting is I spoke with some people about the fact that, yes, we finally have become bearish in this market. So I was actually looking to buy this demand zone, right? It gave us some buys, and it failed back down, and then it broke down, right? And then at that point, it's bearish. And you can see that as it breaks bearish, right? So here we go. Here's a structural breakdown, right? Because this was bullish, then it broke down. As it broke bearish, there's a zone right here, right? Beautiful entries. Breaks bearish again, right? Zone, beautiful entries, right? Breaks bearish again, right here. Breaks bearish, oh, sorry, right here. Breaks bearish again, right? Actually, no, it doesn't. For me, I don't use wick, so in this case, it's just beautiful entries on the short side. But during this whole time, I didn't look for a single sell to take, because the reality is, even though this structural delivery is valid, it's not valid for our system, right? So even though there is, you know, box 1, box 2, and we can box 3 it, and all of that exists, and it's true, and it's technically correct, it doesn't line up with the story. And the story is that the market is coming from, remember, you always need to know and be aware of the higher time frame. When I say that, I don't just mean like, oh, just be able to click on it and remember. I mean, be able to literally, you know, tell yourself that story. On the weekly, we've been in a long range, right? A long range, a break to the top side for over 5.5 years. And price right now is above the liquidity portion of that, but it's still pushing higher because it's a higher time frame. We should expect a lower time frame, like a 1 hour or a daily, to sustain a move that could be more impulsive or can go on for a little bit longer, because there's a lot of liquidity that exists on a weekly that might need to be ran by those time frames. Okay, great. So we know that the weekly is very bullish. The daily has been undergoing markup, right? It's been undergoing that markup. It's been going up, reaccumulation, up, and sometimes a 3-box setup. Nice accumulation, continuation. And smart money is getting themselves positioned, right? The smart money that isn't the composite man kind of style, that isn't actually making these huge moves, but the smart money that's aware of what's occurring and getting positioned in that move when it occurs, right, is getting positioned and now needs an area to get out at, right? Similarly, that's why you see stuff like this, like I spoke about, right? Back in the day when we even started here, it started and then it began to run, right? It began to run, never came back, and people are forcing shorts already, but we're waiting for longs, and we're looking inside of here for longs, right? Because guess what? Inside of this area here is exactly what you just saw inside of that area that just played out this week, where it starts to go short and it starts holding beautifully, and it starts making even the smartest of smart money, but they're actually dumb, think that we're finally going short, right? Because it's holding that move so well, right? People are watching this and thinking, wow, these moves are holding really well, so there must be some kind of reason to actually start shorting. When in reality, right, we can go back here and I'll show you this, right? Here you go. You have shorts that are now coming down, coming up to their last up moves before down moves, and holding down very nicely, right? It comes down. A lot of people already want to short here. They want to short here, right? Just because there's imbalance or whatever it might be, but there's no reason to, because it doesn't make sense anymore, right? Because the reality is the move has been put in motion. The smart money that needed to get involved has been able to get involved, and the move should sustain to the upside. And what you should be doing and waiting for isn't for any shorts that you can potentially take down, right? To target a new area down here, because that is less likely, as I spoke about in my which video was it? So you guys know. So don't forget this. Yeah, in this video here, if you force longs, it's going short. Watch it. Remember, it's a 45-minute video, but it will change your life if you actually listen to it, right? And again, it's all free. You don't have to be part of my mentorship. However, if you do want to surround yourself with me, be able to talk to me and other members, you know, and see people get funded left and right, and also, you know, have things critiqued, have, you know, ask questions that you need to ask, be part of the outlooks every week, whatever it is, right? There's a bunch of stuff. Check out that link right there or down here. Again, I'll never message you first, so don't get scammed. Thank you very much. And nonetheless, right, you have these moves up that don't come back, but there's these shifts inside that will occur on the 1 hour that once again are going to give permission for smart money to get involved using that 3-box, or, you know, will come down, right, break up, no permission to get in, and then boom, permission to get in for smart money, because they actually understand what they're looking for in terms of, you know, the structural breaks, the new structural breaks coming in, the protected lows that are now holding price up that smart money wants to probably still protect. So price might, you know, come in and start giving you the Wyckoff here and go long, or start giving you the Wyckoff and come right under and snap back, because what's happening is those people that want to protect those lows, that smart money that wants to protect those lows, sees this as a very discounted price. This is the only time where overbought or oversold really does apply, because at this point what's happening is this market is so it's such a discount in price that this is where smart money gets involved too. So that's where sometimes, if you have a move like this and price comes back and then you see it come through that zone but then right back up with a wick, that's what's occurring. It's that weak to strong hand transfer, but it's instantaneous. It's fast. It wants to take that liquidity and maintain it above that protected low, even if it comes right under it and then snaps back. It'll happen, right? There's wicks like that, and that actually occurs. That actually happened here on the daily, right? Check this out. You have, once again, that break to the top side. And as you have that break to the top side, you have that left behind down move before the up move. And as price comes back, notice every time it just drops a tiny bit below that zone. So that's the entire zone. Notice what occurs. It always snaps back, snaps back, snaps back. Why is it snapping back? Because all that smart money interest, that's now part of the move from here when they were able to get in, here if they were able to get in, which I don't think they would be, because in my mind, this is the zone. So it actually was one of those moments where, there was a deeper pullback, but it didn't come to the zone, right? And then it just took off. So smart money probably would have gotten involved again around here, right? Because then it became a bearish market for a little bit. But again, we don't care about that bearish market. Instead, we're waiting for that long market. And then as that long market comes back into motion, you can be using those last down moves, just like these right here, to start getting long. And then again, there's smart money positioning here, just takes off, doesn't give any normal pullback now. But again, what do you think is happening even after these three up candles? What do you think I'm going to say? What do you think's happening? Retail is looking for huge shorts, right? Like, look at this. Head and shoulders, right? Inside resistance, new channels being built to the downside, right? Whatever it might be. I don't even know. I'm not going to do the retail side, but again, at this time, and again, I'm not just making this up, right? This has been the case, and it has been the case for the last few months, for the last year or something, right? UJ has been heavily shorted by the retail crowd, whereas, it's been showing you that it wants to go long, and those footprints are right there in front of you. So it absorbs that low, right? As it gets just below it, all that smart money wants to protect that position and starts getting into it, and, that's a very discounted price. That's why you're seeing wicks, 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 wicks. Then it takes off again, clears a new high, makes a new structural break. Follow that structural break back to figure out exactly where it came from if you really want to, right? You start following it back. Where's the last pullback? Last pullback was right here before that break up. That's the low, that's the high. 3-box system. Again, if price gets here, good area to be a buyer from, because that's the last down move before the up move. That's unmitigated, right? Price comes in, gives you that same thing. A lot of smart money interest getting involved, and off we go to run, and then the complete explosion. And as this explodes, do you think we're sitting here going, let's look for a pullback, let's look for a pullback, let's look for a pullback, let's look for a pullback? No, we're looking for ways to get involved long, which means we're watching the inside days of these and waiting for price to potentially even shift short, and then look for it to shift long, and then get involved with that smart money side again to continue going long. And I'm going to show you an example of that right now. So I actually didn't get to catch a move all the way up in here. I only took a small little 1 to 10 in here, and then it ran without me because it stopped me out. Actually, I got out of it myself using my own trailing rule. However, there were a ton of people in the mentorship that caught it. I actually went over in my last video that I've released on this channel. So check that out if you guys want to see that, right? But what's occurring is, once again, we go to that 1 hour and you're seeing that same thing, right? There's a good delivery here that's bearish, but even though the setup is valid, it's not valid for us to take it because we understand what we're looking for. So instead of taking this, we can map it out and understand what's occurring. However, we're looking for any bullish reason to go long. So again, we can continue drawing out the structure, right? It breaks down again, great. And then we have a high here. So all I'm waiting for really is the high to break to then be in that bullish bias again. Because at that point, what that means is, that 1 hour is now shifting bullish within, remember, be able to think where you are in the market. The 1 hour shifting bullish within an already 4 hour bullish, within an already daily extremely bullish that has just liquidated a 5.5 year long weekly range, right? So you should always be able to take any market, whether you're on the 1 hour or even the 1 minute or even the 1 second, right? Because we trade the 1 second at mentfx as well. And you should be able to ask yourself, what's this market doing on every time frame? And you should be able to go from time frame to time frame to time frame and know exactly where it is, right? I can go and say right now, the 3 month is breaking to the top side and just liquidated a high. The monthly, actually, I don't know exactly what the monthly is doing, but it's not important because the weekly takes care of that right now, right? The weekly had made that break of structure to the top side and has taken 5.5 years within this zone, right here, and then underwent that mark up through the daily over and over and over again, took out this high, and prices around here right now on that daily, right? I have that synopsis in my brain. I have that screenshot of that in my brain. So I know that even when on this lower time frame, price begins to make a pullback like this, right? Like this right here, where you want to get short, that's probably a pullback that's acting as a weak to strong hand transfer before a new reaccumulation to the top side. So instead of trading those points, even though they may work like they do here and like they do here, right? Comes in, liquidates. We will wait for the optimal setup and the optimal probability because we're aware of what smart money wants to do with the market, where smart money wants to take the market, and most importantly, I mean, again, I never check this FX book thing. I'm only putting this up here to show you proof that, you know, this happens every single day, every single week. You know, have this open for yourself if you want. Start doing real analysis using the 3-box method and then check what the retail crowd is up to. And you'll see a lot of the time it disagrees with what you might be doing. You know, now sometimes you'll agree and it's fine. That's normal. However, most of the time, I mean, you know, retail's been short on this for God knows how long. And I mean, this is billions, millions of dollars lost for retail on the dumber execution, right? On this kind of belief right here. Now, for some of them, it's fine because, you know, they have a real risk management system and, you know, they might be looking to force shorts later and they might catch that and they'll be fine. However, for most people that don't have a psychology that's riddled for this market or don't have a game plan or are getting quickly confused, or even hedge funds that are working and really relying on mean reversion strategies, this is just, they're gone. They're out of business. They're liquidated. I mean, it's beauty. And you can learn to see it every single day, every single week, every single year, every single decade. And you can get used to seeing it. And it continues happening regardless of the time frames you're on, right? So then as we had this break to the top side, that's now my bullish break, right? Now, again, am I looking for a pullback into a zone or am I looking to continue going long? You should be able to answer this right now, right? If I'm looking at the zone, do you think I'm looking to sell price into here, or am I looking for any formula to be able to long it? The answer is I'm trying to look to long it, right? I'm not interested to short it, even though it makes sense and can go short. There is no point to force shorts in a market that wants to show you that it wants to go long, right? If you force the longs, you know, it's going to go short. If you're forcing the shorts in a bullish bias, it's going to go long and it's going to keep doing it. And you're going to keep being wrong because you're continuing to act like the emotional. You're continuing to act like the psychologically inept. You're continuing to try to short a market when it wants to go bullish just because you're seeing some form of bearishness, right? You're like, oh my God, the bearish are taking control. We need to get in. They're taking control of the market. When in reality, it's the smallest blip in regards to what a higher time frame may be doing or may be experiencing. Now, again, you know, I might have been wrong about this and it could have started to make that pullback, which is fine. That's part of the game. However, like I like to say, I'd rather be wrong once at the very end of a trend that I've been correct about for the last, you know, God knows how long, rather than be wrong at every single one of these points until I'm right once about this reversal here, right? And again, that reversal didn't happen. So once again, add that to 501 times that retail was wrong about the overall direction on this just in the last like week or whatever it might have been. You know, so again, as that makes that break, I'm already looking for longs, and you know, I'm not going to break it all down, but I had a long just about, my God, my nose. Oh, fuck. I hate allergies. Right. I had a long just around inside of, let me find it. Where was it? I think I had a long somewhere inside of, it was during a PM session. I think it might have been somewhere inside of here or inside of here. I'm not 100% sure. I don't really remember. You know, I can bring it up really quickly on my other monitor. 1 second, guys. Where was this? Yeah. So again, here's that bias I sent out, right? Like this is that 1 hour right here. You can see we're looking at the zone and we're saying it's going to go long and keep on taking out this high right here, which is, just so you guys know, was this week. It was this high right here, right? So that's on the 1 hour. Here we go. Here's that high right there. Here's that high right there. We spoke about just going long, right? I just sent this out because that's the bias I was working under, right? And then as I continued to go forward, I took a long inside here. I actually took a break even down here before that, right? I took a long in here, and then I closed on my normal double MB shift rule, right? But I secured a plus 10 right there just based on my normal trading system. Now, we also, as I spoke about prior and in the last video, had a ton of members take that UJ buy and are still holding it. We have one guy, Joya Trader, he's actually a funded member that's still holding this right now at 1 to 180 RR total on running. Now, again, he's not actually 180% up. He only has 25% of his original position still running on this, or maybe he took another partial, so maybe 12.5% running on this. But again, it's very cool to see that you can marry an understanding and then be able to properly trade in the market. So I think this video is getting a little bit too long. I don't want to keep it too long yet. It's about 40 minutes. So we're going to cut it out right here. But again, guys, thank you so much for watching. I hope you understood, you enjoyed, and have a little bit of a further understanding as to how you should be looking to catch moves. Not in the state of looking for that deeper pullback, but in the state of continuing to look for those continuations long, looking for those new smart money moves to present themselves on the 3-box system, and as they get there to then look for that long, right? And sometimes you won't get that pullback, and that's fine. But again, as you play between timeframes, you'll notice that as you have a time frame shift on a certain time frame like that, right, you can have a lower time frame inside of this area here, right, begin to shift bullish here, even if it doesn't get here, and look to take longs. Maybe even shifts again, doesn't give you an entry, maybe shifts long, maybe shifts back short, right? Maybe gives you an entry, you take a break even, shifts back long, shifts into here, gives you a nice entry, runs, hits you at break even, or you get a first partial, shift short, you wait, hits nicely on the short, you wait, hits nicely on the short, you wait, because you know what you're looking for, right? People are positioned on short, whatever, dumb or smart money, maybe even taking this, whatever. Shifts long, you look to take it, doesn't get to your zone, shifts long, you look to take it, and off you go. And that's the explosion. And that's exactly what happened to, some of our traders this week in the mentorship as they took that long on this, right? And again, we do this every week. We have our outlooks every week. We call moves 24/7. Again, there's no signal based. It's all perspective based, of course, not financial advice. However, if you want to be a part of it, you want to excel, you want to actually focus on learning, and you want to take, education like this and experience it on another level, on a deeper level with extra comp firms, the mentorship is the place for you. The link's down below. The link's on the screen. If you want to get funded and you're already set and you've been using the free YouTube maybe and you're set, consider checking out the funding above. Broker's also down below in the description. It's a pretty good broker. You should check it out. And nonetheless, thank you so much, guys. I appreciate you all for watching, and I'll see you all in the next video.